Good morning, everybody. It's Wednesday, April 3rd, 5:26 a.m. Central Time. Grain markets are mixed this morning. May corn futures up 3/4 of a cent at 427 and a quarter. May soybeans down 1 at 1173. May Chicago wheat up 1 at 546 and a quarter. May Kansas City wheat up 3 3/4 at 567. May spring wheat up 3 3/4 at 631 and a quarter. The corn market's gotten beat up the last couple of days.
It sure has. The corn market has erased all of the gains associated with last week's acreage report. Corn futures notched their biggest two-day decline since February to start this week. The losses come despite last week's USDA report, which showed a significant decline in projected corn acres this year. Following losses on Monday, May futures declined 2.1% on Tuesday. Farmer sales and a lack of short covering have also pressured the market.
The Bloomberg piece that we cited here says that this is a weather issue. I don't believe this is a weather issue at all. Let's look at the May corn chart to start off. So the market went up to a very obvious point of resistance. There was this big downtrend line off of that October high in the May corn contract. You went up and tagged it, or depending on how you draw your trend line, maybe ran some stops above it very briefly, but then you reverted right back over. So it was an obvious point from a technical standpoint for the rally to stop. The biggest thing here, I think, first off, is that the trade just doesn't believe that acreage number, that 90 million. I think a lot of people believe that the corn acreage number comes up in June. There's a lot of historical precedent for that. We'll talk about that in a minute. The second thing is that even with 90 million, even if 90 million is the real number for corn acres, you probably still need some sort of weather issue to help to rally the market. Because if you plug 90 million, even with the trend yield into your balance sheet, you're still looking at like a 2.3 billion bushel carry out for new crop based on the Ag Outlook Forum numbers. So it's still, it doesn't turn it into a super bullish situation. It just gives you a better chance. Brazil is in okay shape. I know some of the crop estimates have come down there. The last thing I wrote down here is that the issue of farmers holding onto old crop grain or corn here in the United States. I think there's still a lot of unpriced bushels out there. I think the farmers sold that rally on Thursday and into the early part of this week. And you've got another basis contract pricing period coming up at the end of the month. First notice day for May grain futures or corn futures is April 30th. So in the days preceding that, you're going to see again the farmer in some situations forced to a decision. Do I price these basis contracts or do I roll them? And that sort of situation is what, in my opinion, bottomed the market back in February. Could you see something similar at the end of this month? I suppose it's possible.
Chinese customs are asking traders to limit corn imports. The goal of the request is to support prices and also reduce a domestic surplus of corn. Chinese corn prices have fallen to their lowest level in more than 3 years due to a bumper crop, increased imports, and weak demand from the livestock sector. Domestic oversupply has caused government stockpiler Sinograin to buy corn for reserves to help boost prices. Officials are asking traders and processors to keep imports below last year's levels. However, the USDA is projecting Chinese corn imports will rise 23% this season to 23 million tons.
The old adage as it relates to China is to watch what they do and not what they say. So I wouldn't read too much into these headlines coming out of China. That being said, Chinese corn imports are slated to be, USDA says they'll be the second best ever this year. The best ever was the 2020-2021 marketing year when they imported 29.5 million metric tons. The number should be about 23 this year. I don't think, as it relates to the United States, I don't think China itself is the problem. The United States is going to be back as the top exporter this year just by a very slim margin. Here's the problem, is that Brazil is becoming a much, much bigger corn exporter. You can see the last few years what's been the trend. Brazil's exporting more. The U.S. is exporting less. And I think that Brazil and not China is probably one of our problems when it comes to corn exports, that Brazil is just taking a lot of the Chinese business that may have come to the United States. So that's probably your issue here.
So if you guys have not checked out our premium content, you need to do so. You can't find content like this anywhere else. Joe, can you tell me about yesterday's video?
So I mentioned earlier the March to June acreage changes, and yesterday's video was a short, like 3 or 4 minute explainer, but I had some really cool charts in there where I went back, I think 20 years, and we had every March to June acreage change in corn, every March to June acreage change in soybeans. We had the averages, we had the combined corn and soybean acres from March to June, and we made this all available in a PDF chart download, which is just a one-click deal in the email to download. So if you guys want to see that, I think it's really important to understand the history behind the acreage report. Go to standardgrain.com. You can sign up this morning. I will forward you a copy of this morning's email, which includes that video and that download link. This is a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. Just a ton of info direct from us every single business day, guys. Premium subs are what float the boat for us. We're able to get up and do the podcast and YouTube every single day because of the premium sub. So if you're a premium sub, we love you to death. If you're not, we'd love to have you aboard. So give that deal a shot this morning.
Oil futures climbed higher on Tuesday. WTI crude rose as much as 1.7% yesterday to top $85 per barrel, its highest level since October. Rising tensions in the Middle East, along with Ukraine attacking Russian refineries, have fueled prices this year. OPEC Plus maintaining its production cuts through at least June have also supported prices. The rise in oil prices has led to the energy sector on Wall Street rising by 14% year to date.
Crude market looks a little bit better. I'm sure there's some fundamental reasoning behind this, but I have had several very smart people tell me that there is growing concern regarding some sort of reinflation event this summer into the fall because of the Fed's plans to cut rates, and also partially because of just lack of confidence in the U.S. dollar. And we're going to talk about that in a minute. But if crude gets good enough or high enough, put it that way, high enough, it could be enough to at some point help to support the broader commodity complex. You're not to that point yet. You look at the grains. There's no correlation here yet, but if it gets high enough, there could be. And, for you guys, if you farm, you live in kind of a backwards economy versus a lot of the population. High crude prices could help corn prices, which would be a net positive for you. Whereas for the vast majority of the population, everybody hates high gas prices and it's inflationary and it's bad. But for you guys, it could end up being a good thing if crude gets high enough.
Gold set an all-time high yesterday. U.S. gold futures settled 1.1% higher at $2,281.80. Gold continues to be viewed as a safe haven, especially as tensions increase in the Middle East. Yesterday, Iran vowed to take revenge on Israel after an Israeli airstrike hit Iran's embassy in Syria on Monday. The current gold rally is somewhat unusual considering that the U.S. dollar and Treasury yields are on the rise. The rally is also unique due to the likelihood of U.S. interest rates staying higher for longer. Gold has risen nearly 10% just this year.
Okay, so higher for longer is relative. They're still talking rate cuts this year, and that's our next story. But I think this is happening for a couple of reasons. I think that the gold traders, I think they're looking, or investors, I think they're looking at the interest rate situation and they're saying, you know what, they're going to cut rates, and that's positive risk assets. I think this is also just a play on the, as Jim Uriel likes to say, the stewardship of the currency. People don't have any confidence in the U.S. dollar, and why would they? The government has done nothing but print money and cut rates to the detriment of just about everybody in the United States, barring maybe some of your top level elites. So I don't know. I think this speaks to a number of things: the Fed rate cuts, maybe a possible reinflation event, maybe lack of confidence in the dollar. There's a lot going on here.
Strong economic data has caused investors to become pessimistic about rate cuts. Swap markets are projecting that the Fed will reduce rates fewer than 3 times this year, with rate cuts only totaling 0.68%. Meanwhile, the Fed is projecting 3 rate cuts totaling 0.75%. The markets have reduced their expectations of a rate cut in June to 63%. On Monday, economic data revealed that U.S. manufacturing unexpectedly expanded in March for the first time since 2022. Also, last week, the Fed's preferred gauge of inflation, the PCE price index, rose by 2.8% in February compared to the previous year.
I threw a 10-year Treasury note in here. So the bond or Treasury prices have fallen, which means rates have increased a little bit on the long end. Short term, so yeah, as you mentioned, 62% chance of a cut in June. It's a 75% chance that there's going to be a cut by July. So I think the idea is just maybe fewer or rate cuts to a lesser degree by the end of the year. But I think that I think that still the idea that rates are going to be cut has driven ideas of perhaps a reinflation event, which could be friendly commodities. And I think that's why a lot of your risk assets, you look at the stock market, which is basically record highs. I know we were off yesterday. You look at crude, you look at gold, you look at things like Bitcoin, you look at real estate, everything's really, really strong. And if the Fed cuts, it could make some of these things even stronger, which is kind of a, I don't know, scary prospect as it relates to inflation, I think.
President Joe Biden and Chinese President Xi Jinping spoke for the first time since November on Tuesday. The two leaders had a phone call where they talked about U.S. China relations. They also discussed China's support of Russia in its invasion of Ukraine and tensions surrounding Taiwan. President Xi said if the U.S. becomes involved with Taiwan, it would further sever relations between the U.S. and China. After the call, the Chinese government reported that the US China relationship is stabilizing, but issues between the two countries are increasing. Treasury Secretary Janet Yellen will travel to China today to meet with her counterparts over the next 5 days.
Still a lot of chatter about the Taiwan thing. I don't know if an invasion is likely or imminent or not. If that does happen and we sever ties with China for whatever reason, that's probably not friendly to your grain markets. That being said, as of right now, China will buy U.S. corn and soybeans and other commodities when we're competitive. And we're just not competitive right now. And that's the reason that they haven't been around for corn in particular. What did cattle do yesterday?
They firmed and they clawed back a little ground from the massive losses that we saw on Monday. Feeders closed an average of 243 higher. Live cattle closed an average of 102 higher. There wasn't any more news about the avian flu in those dairy cows. I don't think there's any doubt that we will continue to see a few more cases pop up here and there. But again, it's just important to remember that that has no impact on the meat or the milk. It should not have an impact on the market. Box beef had another down day on Tuesday. Choice end of the day at 304.16. That was down $1.58. Select end of the day at 298.99. That was down $2.80.
Outside markets on Wednesday, U.S. dollars about flat. Stocks are lower again. The S&P's down 13. The Dow Jones down 36. Bonds are flat. Crude oil's up 35 cents at 85.50 in the May WTI. Have a great day, guys. We'll talk to you on Thursday.